Start investing in gold and silver at sdbullion.com today and join over 35,000 precious metals investors who have made the switch to the lowest gold and silver prices in the industry. SD Bullion recently claimed a spot on the prestigious Inc. 500, making them one of the fastest growing bullion companies in the United States. With low bullion prices and over-the-top customer service, SD Bullion is setting the standard for precious metals transactions. Visit www.sdbullion.com today. Start saving on every precious metals purchase you make.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us today is our good friend Craig Hemke of TF Metals Report. Craig, it's great to have you back on the show.
Hey, what's up, Doc?
Doesn't ever get old, so I just wait for it now. So what's up is gold and silver this week, and it hasn't just been this week. It's been, about 6 weeks now, Craig, ever since the Fed hiked rates in December. About a day or two later, this bull market rally began. And a week ago, we had a bit of a pullback. Gold traded back under 1,200. Silver traded, to about 1,660. But it's been a nice week here, and a nice recovery, and it's strengthened a bit here in the last 24 hours after the FOMC statement on Wednesday, where the market kind of suddenly realized that there's not really much chance of any further rate hike in March, as the Fed has had to back down a little bit on their statements for more imminent rate hikes. I personally was a little bit surprised because from some of the things that the Fed goons have been stating in their statements and speeches the last month or two, I thought they might try to take on Trump a little bit harder, but that wasn't the case, at least so far, and gold and silver have responded. They've pulled back a little bit here in the afternoon. We're recording on Thursday's access market trading here. Gold traded up to about 1225 today. Silver traded up above 1770, I think 1775, 1778 was the high in the day. Silver especially has pulled back about 25 cents. Gold's retraced about half of its gains, but still strongly up off the 1200 level that was retested early in the morning, only a little over 24 hours ago. So let's start with the market action and everything that we had over the past week in looking forward for gold and silver, Craig.
Doc, it's very encouraging, and it's that old Yogi Berra line of deja vu all over again, right? We watched in late 2015 when everybody began to anticipate what was a done deal of a Fed rate hike in December of 2015. We watched gold and silver both come cascading down. They bottomed out and, in fact, actually put in their lows the day after that Fed rate hike in December of 2015. And then we know what happened next and how last year played out. Well, of course, then gold and silver came cascading down again in November of 2016 and bottomed out, as you said. Gold bottomed again the very day after the Fed rate hike. And has since rallied. Maybe 4.5% in January. Silver was about 9.5% in January. So many things. Again, it's deja vu all over again. So many things remind you of last year, whether it's gold, silver, the miners, the predictions that are out there about higher dollar and higher interest rates and the Fed making all these rate hikes. I mean, it's all the same thing. Heck, we can even go back to 2015, and we were expecting news of a rate hike as soon as March. And then obviously you can go all the way back to 2009, 10, 11, 12, 13, and 14, and the rate hikes never happened. And here we are. Yeah, I've challenged everybody on my site for about the past 6 weeks to act as a contrarian in general. There is this narrative that has been forced down our throats since the election of Trump that this is easy, that the dollar's going to go higher and that interest rates are going to go up and that the stock market's going to go up. And we've seen the VIX go down with it, because this is going to be so easy. And I suspect, for a number of reasons, that it may be a little less predictable than what we're being led to believe. And so far, so good for the metals.
The consensus trade certainly has been, that everything's wonderful, Dow 20,000, and all the wonderful stimulus that's going to come from the fiscal side. The Federal Reserve going to save the world yet again, and those monkeys always fail. The Fed has never, ever, ever been able to resuscitate a saving of the economy. Every single time we've had a financial crash, NASDAQ, the housing market leading to the 2008 ultimate crash, all they do is blow bigger bubbles. And now we're about to see the consequences of the last bubble that they blew to save the previous disaster that they engendered.
And isn't it interesting, Eric, how the narrative, what it was, at least prior to the election, how it then flipped 180 degrees, but now it's actually playing out the way people first said it would. And to that point, what I mean is we were told all through the summer and into the fall that the election of Donald Trump would be wildly unpredictable. You don't know what's going to happen, and it's going to be really good for gold and bad for the dollar. And then as soon as he was elected, I mean, it was one sell-side analyst after another, one blogger after another. Everybody, oh, boy, dollar's going to the moon now. Boy, I tell you, this is great. And now that Trump's actually in office and he's firing off these tweets on a daily basis and his chief trade advisor is going after every other country and the dollar's going down, all of a sudden the reality is that what everybody initially suspected about Trump is what's actually playing out. And I think it's only going to get more interesting. You know, this guy, his top trade advisor is a guy by the name of Peter Navarro. And when he was named to that post about 6 weeks ago, we were quick to point out that while I guess a well-trained economist and academic, he has written a number of books. The two bestsellers, again, this is Trump's chief trade advisor. His two best-selling books, or the books he's best known for, are called The China Wars, and the other one is called Death by China. So when Peter Navarro sets his sights first upon the EU and Japan, as he did earlier this week, I think you can imagine it's just a matter of time before he turns his attention to China. And I mean, you can't even say China these days without feeling like you're Donald Trump. China, because he talks about it so frequently. That ever
solidifying. Yeah, and he's in fact solidifying those relationships in advance of ramping up an aggressive shift in American foreign policy and economic policy towards China. That's what all of that's about. And we saw, dialing back of tensions against Russia, and there's literally a split in the ruling elite of the United States, where the neocon crazy lunatic faction that went as far as to even dream about doing colored revolution tactics against Russia, were Hillary Clinton to have been elected, in an effort to, basically the whole 100-year plus thesis of geopolitics of dividing the heartland of the Eurasian continent, and with China and Russia having grown closer over the last 5-10 years, that has been seen as a strategic threat to the interests of the American empire. And there are different factions in the way in which they look at that geopolitical paradigm and imperative to, as Zbigniew Brzezinski spoke of so nefariously and eloquently in his Grand Chessboard book, dividing the heathens and separating a coming together of the Eurasian powers so as to check the American empire. I mean, a lot of people in America would hear these words and think that I'm crazy to actually speak in these terms, but they're not my words and they're not my terms. They're literally the frame of reference of the policymakers at the absolute top of the foreign policy establishment. And Zbigniew Brzezinski is, for those who do not know, he's on par with Henry Kissinger. He's one of the architects of American foreign policy over the last 50 years. So he was the national security advisor under Carter and was, in fact, the man who brought to the Soviet Union its own Vietnam, to quote him, by using Osama bin Laden as our back pocket terrorist to go after the Soviet Union and Afghanistan. So we have a shift going on right now where, there's a segment behind Trump of the oligarchy of our elite that is now shifting its attention towards making friction and ring-fencing China as opposed to focusing on Russia. And all of this, tying it back into precious metals, is going to play out this summer where, Doc and I have talked about over the last couple of podcasts that we're likely going to see China be declared a currency manipulator. And in response, they're going to let their currency decline even further because it's going to be an escalation. And what that'll do is end up, dropping bombs into even equity markets like the S&P 500. I know you've done a fantastic job talking about how when China's devaluation against the dollar accelerates, we end up seeing repercussions to even the S&P 500 equity universe and so forth. And that kind of fireworks is going to put a afterburner on precious metals, and gold and silver are going to rocket higher.
Certainly shaping up that way, Eric, no doubt about it. And again, just to caution everybody listening, I mean, it was a fait accompli 6 weeks ago. Every bear in the world, from snake oil salesman Harry Dent to the jailbird Armstrong, they were all out there talking about gold 700 and 500 and all this other just utter nonsense. And this was a done deal, right?
Right.
You know what? The world doesn't move in your nice little academic linear fashion. And all of these unintended consequences, and chaos theory and all this other stuff that applies to the world at this point, geopolitics, the global financial system, that's all in play. And, man, it just makes all of my shiny metal that I've purchased from SD Bullion over the years just look that much better.
Yeah, I agree. I mean, everything is shaping up to, Eric put it well, an afterburner to the back of precious metals, tailwinds behind them, however you want to say it. It's shaping up to definitely have some positive momentum behind the precious metals. And it's been interesting because with all the Trump euphoria in the retail market in the U.S., demand has cooled down a little bit for gold and silver. I mean, it's still pretty strong relative to, say, a couple of years back, but versus the type of demand we've seen the last probably 12, 18 months, demand is cooled off a bit here to start the year. And I personally think a lot of it is that a lot of Americans who are stackers and protecting from a currency collapse, they're riding the Trump euphoria and they think that everything is going to be great again. And while our economy might improve a bit, and with jobs, you still have the debt crisis. I mean, that's not going away. That's only going to increase with Trump. And I'm with you guys that I think it's going to propel prices higher over the next couple of years. We'll see.
And we're going to see long-term interest rates back up further, regardless of the fact that we have a stagflationary backdrop where the economy will slow, despite all of the fiscal spending and despite the amount of tax cuts and things like that, because traditionally, tax incentive-based fiscal changes to policy have about an 18-month transmission mechanism into the real economy. And we're still reeling from where we've been already. So, the main thrust that has, been behind Dow 20,000 plus and the strong ADP report, in fact, that shows that the jobs were most of that is psychology. And it's pricing in the kind of sentiment shift that has happened by just people feeling more euphoric. Even the University of Michigan statistics for consumer confidence shot up in the 6 weeks to 12. There's just a lot of people expecting things to be better, and then all of a sudden, those numbers are now diverging too. So it's a confluence of economic factors that will support corrections in the S&P 500 universe of standard equities, and that's going to shake people up. And it's not what people are expecting, and that's going to be another factor that'll be positive for precious metals as interest rates move up and the bond market begins to bite, because we created the biggest bubble in world history in finance in the bond market. These idiots engendered a level of distortions in economic reality that is mind-boggling. And the chickens are coming home to roost. This year we're going to see a lot of turmoil because of it. In fact, that's also part of the reason why Trump is wanting to have the dollar weaker, because with the dollar moving up, breaks things all over the place. It's linked to the credit market bubble that was created in the last few years.
Well, and that's all part of the cycle that's going to be very hard for them to break without it causing major problems. Because with the yuan pegged to the dollar, if you do have a stronger dollar based off these supposed higher interest rates, that everybody talks about, then that makes the yuan go up in value too, which just pressures their economy more and more and pressures them to devalue. And I got to tell you, who knows? I'd be dead wrong. I've been dead wrong before. Maybe everything's just going to be great. And now we're right back to where we were, in 1981, and man, everything's wonderful. I just don't see it. And and the factors for global gold demand, I think you're right, Doc. If American coin demand is off, it's because enough people have begun, have that feeling that hey, it's morning again in America, whatever. Around the world, though, whether it's what has taken place in India, whether it is the capital flight from China, and Eric Sprott was telling me last week, China now has an all-physical ETF that is seeing just huge surging investment demand in China. You've got that whole Sharia-compliant gold deal that's out there. Yeah. I mean, they're all. Have you guys seen did you see the export numbers from or into Switzerland? Where those imports came from in January? Look,
we talked about that with Dave Kranzler in our last show. I mean, and all the while we've. GFMS and Reuters are talking about how, China sold, I don't remember off the top of my head, but it was approximately 20 metric tons, maybe a little less in December, because they're dealing with a currency crisis. So they're using a little bit of their reserves of gold to try to, slow down the devaluation of the yuan against the euro and the dollar. And they have a crisis going on. So they sold a little bit of gold. But meanwhile, Switzerland ships 156 metric tons, give or take, of gold in December to China as their citizens go berserk and are buying tons of gold. And we don't hear that reported in the mainstream media. Instead, we hear, China's demand for gold is tapering down. What kind of total nonsense.
And look, I'm never going to be confused with being the sharpest knife in the drawer. And nobody ever sees me walking down the street and they say, oh, there's smart old Craig. But I don't, and geography, I took some geography in high school and college and that kind of stuff. I'm pretty sure there aren't any gold mines in England. I've been over there, had some fish and chips, knocked back a few room temperature beers. But I didn't hang out with a bunch of gold miners when I was in England. And so when I see England in the month of January export 150 metric tons of gold to Switzerland, I'm pretty sure that didn't just come out of the ground, right? That's coming out of somewhere. Okay, it leaves London in the form of the antiquated 400-ounce London good delivery bar, like Bob Pisani held up when he was in the BlackRock, the State Street, the JP Morgan, wherever the hell he was, right? It leaves London in that purity, 3.9 and a 5 purity, whatever the hell it is, and a 400-ounce form, and it goes shipped into Switzerland, where the only reason it's going there is because Switzerland's got all the refineries where they re-refine it to 4.9 purity, and cast it into kilo bars, which is the Asian/Chinese standard. That shit is gone, man. It ain't coming. What do you think? At some point in the future, it's going to come back from China and it's going to go into Switzerland and they're going to recast it into 400-ounce bars and ship it across the channel and back? No, man, it's gone. And it continues to flow that way, regardless of what people say. And the banks somehow managed to keep this whole magic dance afloat where they were just in time. They deliver gold to whoever might want it. One of these days, though, the whole mechanism is going to seize up. When that's going to happen, you got me. I just know it can't go on. What, England's going to keep exporting 150 metric tons a month until the year 2045? No.
Yeah, no way. Yeah.
Probably not going to happen.
And some of that is probably even coming out of the depository for the GLD.
Sure it is.
Who knows? We've seen that before.
You got the depository for GLD. You've got stuff like whether it's Venezuela or other nations that they're holding their gold with the Bank of England. It's the same thing as the Fed does. I'm sure they're not shipping their own gold out first.
Exactly. And so we're supposed to think, though, gold's going down. Why? Well, because I read my charts, and my charts show that we're in wave B of subcycle X of grand supercycle 1973. What?
Right.
That just means jack. But if you got a newsletter to sell and you want to convince everybody you've got it figured out and you're smarter than everybody else, then yeah, by all means, confuse me as much as possible with your cycles and your waves. What I'm saying is the real thing is just continuing to disappear, moving from west to east. And that puts the West at a tremendous disadvantage for the new, whatever the next financial paradigm is when it comes. And in the meantime, if there's actually a coin shop, and I know there is, and I know the doc will even do this, bless his heart, if there's some place that's willing to accept your Federal Reserve notes, and in exchange for Federal Reserve notes, will ship you an ounce of actual gold that you can put in your hands and then put in your safe, take them up on it, man. Because when the you-know-what hits the fan and all of this comes to a screeching halt, and it could definitely happen this year the way Trump is going to be provoking China. It ain't going to be $1,200 an ounce if you can find it anywhere. So that's my soapbox moment for the day.
Yeah, I came across an interesting thought this week that kind of sums it up with our new president, and it went, gold prices are a single tweet away from new record highs.
Yeah, that's right. No, that's a very
He does tweet out bombs.
Like I said, how many times did Trump talk about China? That's right in his wheelhouse. And when his chief trade...
And Craig, I want to ask you, Craig, the Chinese, yes, it's a manipulated communist economy, but they're sitting here, and I guarantee you they're analyzing Trump. They're analyzing his moves. They're watching last week where he just hangs up on Mexico's president. Yesterday he just hung up on Australia's prime minister over a bad deal. So, and they can put two and two together that they're coming next. What are the chances, and what does it look like if China, now that they're finally back from their week-long Chinese New Year, they start analyzing the situation and they decide to preemptively move to adjust the yuan?
Right, exactly. And everything would like telling us that that's coming anyway. So you're right. What if as soon as next Monday something like that happens? I've preached this gospel now ever since there's been a TF Metals report. It dawned on me 10 years ago that where John Connolly had said, in the 1960s, the dollar is our currency, but it's your problem. And having the ability to be in the world's reserve currency is an exorbitant privilege. And the U.S. had that exorbitant, it still does, I guess, and we squandered it. We obviously took advantage of everybody. We squandered it. Well, why wouldn't the Chinese, with 1.2 billion people to mollify, why wouldn't they want that exorbitant privilege in the 21st century? And to that end...
That's what they're working towards. They're overtly doing it.
That's exactly right. To that end, they're stealing the West gold at this manipulated low price and just accumulating it until the time of their choosing they want to pull the plug. I will always believe that they were caught somewhat flat-footed in 2008. They, the Russians, the Indians, all these dollar creditor nations. And when the dollar debt-laden system collapsed in 2008, they looked around and went, oh, shit, what are we going to do now?
Yeah.
God. And so what they did is they bought time, and they've been laying the foundation brick by brick, building a new system that when they need to turn it on, whether it's next Monday or next year or whenever, now they won't be caught so flat-footed the next time the West collapses. But now they have the ability to turn it on anytime they want. Oh, you hang up on me?
It'll be a multi-phase switch. It's not like a single switch. It'll be a whole set of switches, and 1 week they'll do one switch, and then that kind of thing, and then 2 months later they'll be ready to do the next switch. And getting to your question, Doc, if Trump announces that China is a currency manipulator, I think that's when we will actually see serious consideration, if not outright action by China to do a one-off devaluation against the United States dollar. Because at that stage, they don't really have anything to lose because they're already getting attacked outright. And maybe they do a 20% devaluation, which is what the policymakers there are talking about in, back channel, academic papers, things like that. And it wouldn't surprise me to see that move in the summer, and then the afterburners that we spoke about earlier in the call kicking in, having a fall period going into the winter where just people's eyes are just blown away by what they see gold and silver doing. And I think that scenario has got increasing probability as the days proceed.
Just watching the headlines, you can make that conclusion. No doubt about it, Eric.
Yeah. And it's interesting, too, to see what's going on with silver, and I love your take on this, Craig, because we've seen in the month of January, even last Friday, we've seen a lot of days where silver just kind of leaps higher, and we've had premiums in China that are running at times even $1 above global spot. If we have weakness in the retail market here that Doc was talking about, and it's not super strong, and it's able for the mainstream media to paint a picture of the precious metal just being kind of lackadaisical and struggling and all that nonsense with framing the picture of China being weak and all that, but all of a sudden, like 3 or 4 times in the last 30 days, silver has just outperformed in a very noticeable way. And silver has a tendency of doing that as kind of like a sentiment gauge, a barometer in terms of what the smart money's doing and where the people that don't give a rat's butt about Friday's unemployment report that's going to scare the crap out of the lesser-minded speculators, and we're going to get hit tomorrow. The precious metals are probably going to fall down. And how many times we've been through that stupid cycle? We all know. But, it really does look like and feels, getting back to the theme we were talking about earlier, about how there's so many commonalities with early 2016 and that first quarter and the cycle and the kind of rhythm of the way markets are. Looking at miners today, for example, completely ignoring the attacks that are being leveled against both gold and silver. In fact, as we rounded out the day, gold and silver recovered a little bit. They didn't fall down that much. Even gold today is above where it has been in the last 2 days. I mean, the last 24 hours almost consistently is above where we were over the last 72 hours, despite the fact that tomorrow we got one of the key manipulation events that happen on a monthly basis, the unemployment report. And we have miners performing really strongly today, even when gold and silver were falling. It tells me that there's shifts going on underneath the surface, that you got certain speculator camps within the COMEX pits, and those guys are more short-term oriented, and they don't see the big picture, and they certainly don't marry up with global macro dynamics like what we've been talking about. And then you got the Eric Splotts of the world, and the more deep-moneyed, serious-moneyed people that, because of their size and because of the small size of the precious metals market as well, and also the huge accumulation that's going on in Asia that's just not even being seen by anyone in the Bloomberg/CNBC universe. This reminds me a lot of what we saw in those first 2 months of 2016, where even silver, I was talking about how the gold to silver ratio is going to start declining back. I was talking about that, seeing these very same kind of dynamics that we're looking at in this month and a half since the turn of the Federal Reserve's raising of, their showcase interest rate hike on, what was it, December 13th? I forget now. It feels so similar to the dynamics that we saw last year. And I was just curious what your take is in terms of what you think is going on with silver and how that relates and the miners.
Well, there are a number of things we've been watching there. You mentioned the action within the COMEX. The open interest last year in both COMEX digital metals just, skyrocketed to record levels. And we watched the silver open interest get all the way to like 224,000 contracts, which is just disgusting. And that's like 120% of global mine supply, right? That is just stupid. But anyway, as price came down and all that open interest washed back out, and price fell from, let's call it 21 or, in that area in August, all the way back down to below 16. And a lot of that open interest left, but the long position of what we just call the large speculators, if you put it all together, it came down a little. But for the amount of price drop and margin pressure from 21 to 16 that those guys felt, to have it hang in there, and you can see these numbers, when they come out again tomorrow, 90-some-odd thousand contracts. I mean, that's some serious, deep-pocketed, with serious intention people that are like, oh, no, you're not getting me to sell. And I think we've noted that now for about the last 8 weeks. That's extremely encouraging, just from a COMEX positioning standpoint. And we've seen open interest now just come skyrocketing back. Got all the way down to like 158,000 contracts. I think Wednesday it was 188. I mean, at these price levels, it'll be very interesting to see what happens. In both gold, silver, and the, whatever index you want to use for the mining shares. It was a nasty fallback, like we said, in 2016. It was almost identical to 15. However, on all three charts, you've got a higher low. And as things are playing out off of this most recent low, all three, the minor indices, the gold and silver, you can see clearly forming what we call a reverse head and shoulder bottom. And if these rallies can continue, and that's still a bit of an if maybe I'm dead wrong and the dollar reverses and charges higher and all that stuff, but if these things can continue and if the trend is down in the dollar and all that kind of stuff going forward this spring, and you begin to see silver breaking higher through 18 and towards 19 and gold breaking higher towards, up through its 200-day moving average, and all of a sudden it's up toward 1,300 again. I mean, there could be a real rush back into these things, even on just off that COMEX price. And so, it's been valuable to be a contrarian. It's been valuable to stand against the wind and say, no, I don't agree with you that the dollar's going to 110. I just don't think that happens, and I don't think the Fed's going to hike 4 times. So far, people have been rewarded for looking at things that way. And, man, I tell you what, for all the things that we've talked about for the last half hour here, I can very easily see conditions exist to create, again, an accelerating upside that takes us to higher highs than what we had in 2016 at a minimum.
Yeah, I mean, when you look at those numbers, once silver breaks above 22, I mean, obviously there's resistance points, but on the long-term charts with a long-term perspective, eventually, I mean, once silver takes out those levels at 22, 26, and then 30, I mean, what is somebody who's not even a precious metals bug, just whether it's a fund manager or whatever, if you're looking at the charts and you see silver now taking out 30 and moving to the upside, I mean, that signals a retest of the highs of 50. So, I mean, I'm not saying that we're going to be doing that anytime in the next 6 months, but kind of a more long-term outlook. If we're talking about plays out, there's not really too much resistance past those levels until you're looking at a real bull run.
And Doc, people ought to be thinking, too, about some of these industrial or base metals, as you want to call them. I mean, look at copper. I mean, copper's had this tremendous run, and it's higher than it's been in about 18 months. And looks like it wants to surge another 10% from here, at least back up to $3. Look at zinc. I mean, zinc has had a tremendous 12 months and continues, and you just go up and down the line with the base metals. This idea of inflation and infrastructure spending and all that kind of stuff that's bandied about and somehow determined to be bad for silver. Silver has always been something that trades on kind of an inflation trade like that and with an infrastructure trade because it's, besides being a monetary metal, it's a significant industrial metal. So there are a lot of cases that argue that, again, these folks that are out there talking about, I read my chart, silver's going to 6. Okay. I'll admit, I fell for this. I sat there with folks on my site, and when things were coming down last fall, I said, man, if we can get back down to 16, I'm going to buy myself a 100-ounce bar because I don't have all I've ever bought are the Eagles and all these other rounds for reasons we can get into sometime if you want. But I've never had a 100-ounce bar. I thought it'd be fun, 8-pound bar, 8 pounds. You take that baby to the gym, right?
The door stops.
So as it's coming down, I told everybody on my site, man, I hope it goes to 16 because I'm finally going to bite the bullet. Well, when it broke through 16, even I convinced myself that, we're probably going to 1460. That'll save me $140. And I told everybody, I'm just going to 1460. And now I feel like the biggest bonehead. It's like, geez, every time So I never did get my 100-ounce bar, so anyway, maybe we'll
come visit. We'll come visit, Craig. We'll let you hold one and do some.
Thank you.
Some squats
I appreciate it.
And just dig into your pocket this weekend, dude, and cut back on your beer allowance and go and buy your bar right now.
Tell the missus, Turd, that you're canceling the Vegas trip and you're buying a couple 100-ounce bars.
Well, let's put it this way. From what the wager I'm planning to place on the New England Patriots, if the Patriots can win by 4 points or more, I'll be able to buy a couple of those babies. So we'll see.
All right. Well, we better wrap up to let you start preparing for your weekend of fun here.
Yeah, I got to pack.
You got to pack his bags.
Yeah, man, I tell you, it really, seriously, and you guys know this too. I mean, the amount of time that the three of us spend watching these markets, I mean, you're just never away from it, right? I mean, even 10 o'clock at night, I'll check my phone and see something on Twitter and run down to my office and pull a chart off of some side. I mean, it is relentless. And so, yeah, you very much end up looking forward to even if it's only 48 hours, that you can kind of light your hair on fire, knock back a couple tequila shots and throw the bones. You got to do it. And then we'll be back. We'll be back at it Monday. And like you guys said, who knows what next week's going to bring? I mean, every single week with this new administration brings stuff that you weren't planning on. Who knows what February is going to bring? It's going to be a very interesting year, and it's going to be fun to discuss it with you guys as we go through the process.
All right. Well, enjoy yourself, and Craig, it's great to have you back on the show.
Hey, it's always a pleasure, guys. And like I said, let's see if we can't bring. I'm no Patriots fan. I'm just interested in it financially, and if we can. You give Belichick 2 weeks to prepare, I like my chances.
For our new members in our audience that aren't unfamiliar with what Craig does and his work, his website is tfmetalsreport.com. And I've followed many an analyst in our space, and I consider Craig to be one of the most sober and realistic in the way he looks at the assessing of where precious metals are, and he does his best effort to understand what's going on and share that with his subscribers. His service is well worth the very modest amount that he charges, and I'd recommend people go and check it out.
Dude, you are very kind, but pretty soon I'm just going to shut that down and start Turd Ferguson's football panorama picks, something like that.
Yeah, man, that and fantasy sports. I mean, that's your true calling. That.
Yeah. So maybe that's the direction we go. But thank you. And Eric, you know this, and Doc, you're there too. I mean, the best selling point, the biggest advantage that I've got at that side is everybody that's there. Community.
You have a wonderful community.
Isn't it something? I mean, they're all out there looking out for each other and posting, hey, did you see this link? And I saw something last week. Do you remember that one? And that kind of stuff. It's just that thing, it's just great what the group of people there. So anyway, thanks for the kind words. I appreciate it.
TF Metals is like the hive mind of the precious metals websites.
Yeah. And it's run by me.
You and your big yellow hat as orchestrating the Borg hive mind of analysis for precious metals. Talk about oxymoron. A brilliant site run by a guy like me. I mean, it's like Jumbo Shrimp or Paul Krugman, Nobel laureate. Yeah, but it is. But thank you.
All right.
Most welcome.
So again, it's tfmetalsreport.com, and always welcome back on the show, Craig. Always have a good time talking to you.
It's always fun, and I wish everybody the best of luck. Just one last thing I'd give everybody. Tomorrow's going to be as we're recording this on Thursday, most people are probably listening to this, and the market action is behind us, and they know what the employment report was. Watch that dollar index, and everybody, as you're listening to this, should pull up a dollar index quote and just see where it finishes up tomorrow. That thing's down 3 or 4% in 2017, and it is, clinging to support at 100. And on the verge of painting a reversal and a false breakout and all that kind of stuff. So everybody listening, as we wrap up, pull up a chart of the dollar index and see where that thing closes on Friday, and that'll give you a really good idea of where we may be headed from here.
Yeah, I mean, the highest probability scenario is that the dollar will go up on Friday after the employment report stokes up the perception that the Fed is going to have to raise rates and all of that nonsense. And then next week, that trend is going to break. And, I don't think we're going to necessarily see the dollar decline that much over the course of this year. But just sheer stability rather than making that run to 110 on the DXY that you spoke about a moment ago is all we need. Everyone's perception before Trump's appearance in the Wall Street Journal article was that the dollar was going to go to the moon. And that is now out the window. And we talked a lot about that with Dave Kranzler in our last show. I think that's one of the big afterburners combined with everything else we talked about in this call that's going to send precious metals a lot higher in 2017. It's going to be a great year.
All right. Well, we'll certainly look forward to it. So we'll wrap this week's show there. For the Doc, Eric Zubin, and Craig Hemke, thanks for tuning into this week's SD Weekly Metals and Markets.